Hi, I'm Amelia from Market Compass. I'm going to take a look at today's price action that's occurring right now in the New York session in the morning. Here we have Dow Jones. It's a risk-off day in the market, and once again, coronavirus, that macro theme or that external shock, has asserted itself to the front of the market and is weighing on equities. I described yesterday how markets can be a bit fickle, and so yesterday, for the market, coronavirus really was off the radar screen. It wasn't a concern, and it just reasserted itself this morning. There's also some bad news on the airline front as well, that Southwest Airline put passenger safety in jeopardy. So some negative headlines coming out, but really there's a huge focus on coronavirus once again this morning. Here's the Dow. You see it's down today. We have a level here, 285, the figure, and we're sitting above that, but that seems to be an important level. Should we break downside on that? The other stock that's moving quite a bit this morning is Facebook. And even though it had good earnings released yesterday, so the earnings kind of topped the Q4 expectations, but I'm sorry, the revenue, they had good revenue, so the revenue topped Q4 expectations, but the earnings growth actually slowed, and so today that's really weighing on their stock. You see here, and kind of like the Dow Jones, we're sitting at a big level too, 209, the figure here in Facebook. So kind of interesting, the charts are a little bit mirroring each other, Dow Jones and Facebook. Because it's a risk-off day in the markets, what do we want to look at on the currency land? We want to look at dollar yen, which is a safe haven currency. So when there's bad news in the United States, typically yen reflects that. It strengthens more than the US dollar. So because US equities are lower, we're going to look at yen, and yen is getting stronger. So I showed you this chart yesterday. I showed you these downside levels. We talked about this on the global macro event risk call for January. I said to be a seller once we're around 110 because of all of the event risk out there in the market that's unresolved. So yesterday we broke 109, the figure. We were sitting right above 109, the figure, when I did a video yesterday, and now we're downside. So we're at 108.72 right now. 108.50 is the next level, and then of course 108, the figure. If you'd like to subscribe to my global macro webinar, you can find it. I'm going to put up the path that you subscribe to. Basically, once a month I go over all the upcoming event risk and the trading opportunities that are coming around that event risk. This morning, the Bank of England did not cut its policy rate. I talked about that yesterday. Let's look at the Bank of England. It was 50-50 whether they would. It was actually like a little bit less than 50-50, 45%. But the market was really kind of leaning towards a rate cut. The whisper around what would they do was kind of leaning towards a rate cut at Mark Carney's last meeting, and he's the governor of the Bank of England. But you can see here, this is the announcement. So they maintain their policy rate at 75.75%. The next meeting is the 26th of March. And they kept it on hold by a majority vote of 7-2. So 2 people voted against keeping the policy rate on hold, and they voted for a rate cut. So let's just look at the risks to the outlook. They think that growth will pick up ahead moderately, and that's because Brexit has kind of been resolved. Brexit is actually happening tomorrow. But because for the entire year of 2019, looking backwards, Brexit kept getting delayed, the actual exit, that weighed a lot on capital expenditures and business investment plans in the United Kingdom, which weighed on their growth. So what the Bank of England is saying is, now that we know that they're leaving the EU tomorrow, the United Kingdom's leaving the EU tomorrow on the 31st, growth could pick up ahead because there's less uncertainty for companies and business investment going forward. But that doesn't mean there's not without risk. So here they say, policy may need to reinforce the expected recovery in UK GDP growth should the more positive signals from recent indicators of global and domestic activities not be sustained. Okay, so basically they're saying, should there be a global growth slowdown, or should the expectations of business investment coming back and capital expenditure coming back in the United Kingdom not be met, then there'd have to be a rate cut. They'd have to ease policy. So while this was not an exciting rate meeting, a lot of people thought it would be, a lot of traders thought it would be. It ended up not being an exciting rate meeting, but it kind of means that the next two policy meetings, when the new governor takes over in March, could be quite exciting. There could be a rate cut ahead. But let's look at the pound. Here, I talked about this yesterday. I actually said on the video, if they don't cut, if the Bank of England doesn't cut, I think that it's not going to rally. It'll rally a little, but it won't rally too much, and that's what we're seeing. I said it won't rally to the previous high, but the very near-term high probably, which is this point right here. And you can see that's like 131, like 40 area, 40-50 area. So here we're at 131. Like a 1, you know, we really haven't moved that much, considering that it was pretty 50-50 on whether the Bank of England will cut rates, and they didn't. So this isn't like an awesome rally that you would expect, and I didn't expect it. But yeah, traders just kind of ho-hum on sterling right now, kind of questioning maybe that wasn't the right move by the Bank of England to remain on hold. And you know, the price action is reflecting it. It's not doing too much. Traders aren't excited about the fact that the Bank of England was on hold. We also have Brexit coming up tomorrow. And so while the day-to-day lives of citizens in the UK won't change too much tomorrow, we're going to see if there's positive or negative headlines. It'll be really interesting to see. If we do get a rally, what I would call a relief rally, sterling, maybe a mini relief rally, that they're finally leaving the EU after 3 years, more than 3 years of debate and back and forth on how they would do it, and even some questioning on if they would do it post the referendum. We could see a mini relief rally in sterling, but as I said yesterday, it's the weekend, right? Tomorrow's Friday, and then we're heading into the weekend. So you don't want to keep any sterling positions. If you try to capture a mini rally, you don't want to keep any sterling position on past, you know, say 1 or 2 p.m. tomorrow in the US. Liquidity gets real thin, and then we head into the weekend. So just remember that, you know, and I'm not sure it'll rally. I'm not sure what the headlines will be tomorrow. It'll be interesting to see what they are and throughout the weekend and on Monday morning, especially when Europe opens, how the first weekend not in the EU went, and what are the headlines across the press. But you know, if we do see a rally in sterling, I like to short it. I like to be a short seller of sterling, because there's more bad news coming up as they try to negotiate a trade agreement with the EU, which they haven't done yet. So I hope this helped a little today. Take care.